Hey, what's going on, guys? This is Daniel.
And this is Sam.
And we are
the Quack Brothers. And today we're going to talk about rather something interesting and what's a lot of the media companies covering right now. And that is that investment firms and big companies like Blackrock are buying out single-family homes to convert them into rental properties. Supposedly even neighborhoods where they convert the entire neighborhoods into rental properties, which supposedly is killing the dream of home ownership. Now, even before this news came out, I suspected this much. I mean, I knew that institutional buyers were buying, but I didn't understand how big, how much, and how much is it actually creating demand. So, Daniel, the question is, do you think that this is actually going to flip, or is this the cause of the big push in demand for housing?
Well, first off, a lot of people are saying, Daniel, is this gonna flip the housing market? Are we gonna flip this thing upside down, right? For one, I say no, right? Because right now, where's the housing market at right now? It's a very seller-heavy market.
Absolutely.
How is having a big institution coming in, like BlackRock, like all these other people, buying up homes, how is that gonna flip anything? If anything, you're making it worse. You're making it go off even more into the deep end. Because not only do you have private buyers with low interest rates, but now you're adding in a big institutional money that's actually intentionally paying 20-30% over the asking price to be able to buy up these entire neighborhoods. So that's my first point. I don't think it's going to flip anything in the housing market. If anything, in theory, it's going to make situations worse.
So you're saying that someone with a company with really big pockets coming in, they're buying these homes 20-30% over asking price because they can.
100%. And not only that, you're making the housing market even worse. So for one, let's get that out of the way. I don't think it's going to flip the housing market in any way, shape, or form. If anything, it's going to be more advantageous to the seller for institutions to be wanting to come in and pay for these properties with big lump sums. But the real question that we got to ask is, why are they doing this? Why? You would think that these institutions with billions and trillions of dollars are going to want to buy prices when they're low. We saw a lot of that happening in 2008, 2009, when we saw, a lot of these big institutions buy up cheap real estate.
We saw Berkshire Hathaway, which is Warren Buffett's company, one point bought 200,000 homes, neighborhoods, single family houses, pennies on the dollars. It's insane.
So the question is, why now, right? Especially when it's a seller's market.
It's already
the
inflated.
Highest median sales price in the history of the United States. Why would such a big institution with millions of dollars in their R&D department want to buy single family homes? Well, I have a lot of theories. The first one being, well, they kind of want to hedge against inflation. They're seeing a lot of the artificial boosting happening in the stock market, obviously in crypto. Obviously, bond market isn't doing so hot right now with the low rates that we have currently, right? And also the mortgage-backed securities being purchased every single month by the Fed. So one has to wonder, are they doing this to hedge inflation? My guess is yes. As a matter of fact, if we haven't seen it already, I think we're going to see a lot of institutions like BlackRock and these big investment banks put a lot of money in insurance in starting 2022. But for now, I think they're actually looking to buy money in real estate because, well, for one, they don't have as much of a requirement or a strain as your private average American householder is going to have.
So here's another question. Do you think that BlackRock and some of these other big investment companies, I mean, BlackRock isn't playing alone. I mean, they got banks and big companies playing in this game as well. So the question is, if they're paying 10, 20, 30% over asking price, do you think that BlackRock and some of these big investment companies are suspecting that the real estate will grow and will catch up to that point? Do you think that the gap will be filled?
Well, obviously there's the golden rule, right? Ken McElroy says it, right? Somebody that we both watch. He says never buy properties on capital gain, which absolutely is true. You should never buy a property because it's gonna go up in value, right? Because they just
you would hope so.
You would hope so, right?
But you're not betting on that 100%.
Exactly, right? It's like when the South Side had Whole Foods coming in, right? They saw it as the second coming of Jesus for all we know, right? But here's what we have to see. Here's ultimately why if I'm in BlackRock, right, I would think to buy more homes is because right now the rate of home ownership in America, it's at very historically high levels, right? I mean, I think we're going back all the way to 2006, 2007.
I think it's about 60%.
It's about 68%, 69% in terms of the home ownership rate. But, historically, the average is kind of closer to around, I believe, 63, 64. I mean, you're talking about 3 million Americans, right? Ken just covered it in his video. 3 million Americans going into home ownership and coming out of home ownership. I think the play that BlackRock is doing is they see single family rentals going up and up higher. They see the future in America. A lot of Americans, which by the way, could this be the Great Reset? We covered this, right, in past videos about the Great Reset. The ideal is for everybody to be renters. You will own nothing and you will be happy, right? That's the thing.
Full circle, baby.
Going back to this video, they see a lot of individuals. I think they see a lot of Americans going into rentership, right? Which, I mean, we're renters. We can't say anything.
We once owned a home, sold it last year when the housing market was crazy hot, and we're thinking about going back to buying eventually when the housing market cools down a little bit.
Yeah, so I think we see these guys with billions and billions of dollars in liquidity. They need to put the money somewhere.
Right.
Obviously, they're not going to want to put it in stocks. They're going to want to put something that hedges inflation. So for them, it's like, well, this is kind of the best bet because you're meaning to tell me, housing prices are historically low, but we don't really care about houses, housing prices compared to the average, Mr. and Mrs. Jones.
Right. And
why not just put all this money and then the rents are going to go up?
Yeah, and then that's exactly right. So that's the point I want to hit is that I almost said blackjack. BlackRock
insurance.
That's actually a pretty good analogy. BlackRock is right now betting on the fact that the rent rates will go up, not necessarily the appreciation of the properties, because they can pay 20-30% over asking price, but a lot of that could be caught up because of the amount of rents that would increase on the back end, increasing the income on these properties. So I think that's what they're betting on right now.
And you know what? We probably have a lot of haters that go, well, Daniel and Sam, what if, how come the yield margin? Then you only talk about the LTV, right? But you know what? Look, companies like BlackRock, they don't care about the LTV, right? Because they have cash. So many. If anything, they have more of a portfolio risk parameters that protect themselves against all these things. So when they're spending billions and billions of dollars, guess what? They already put it into their risk modules in terms of how that portfolio is going to be allocated and how their capital is going to be allocated. Right. So they have all this money they need to put into some type of inflation hedge, anyways. Yeah. And like you said, Sam, they're betting on the single-family rental rents going up and. Absolutely, I think that's going to happen.
Yeah, so our viewers watching this wanting to invest in real estate, buying real estate for investments, for income. A lot of you guys do, right? You want to get into Airbnb, you want to get into VRBO, or maybe you want to get into the traditional multi-family, single-family investments. So what is their playbook? What should we do to respond to some of these big firms and big companies buying out? What is the next playbook?
Yeah. Well, for one, I think if BlackRock is buying, that's probably a good indicator that maybe you should too. Now, granted, you don't probably have the amount of liquidity, right? Unless you're, Lawrence Fink and you're watching this video, right? But
Larry Fink, yeah.
Right. But, in many ways, if BlackRock, you should buy. I do think, however, that the single family rents will indeed go up, right? I think if you're a multifamily, I think for you as the investor, the best bang for your buck is kind of getting into these duplexes, triplexes, fourplexes. If you're a single family portfolio owner, I think you'll do very, very well. Yeah. Obviously, keep your portfolio hedged, right? Make sure you take care of that LTV. But generally speaking, I think kind of the lower unit count residential units will actually do really well in real estate the next 2-3 years. Multifamily apartments, am I saying that rents are gonna go down? Well, no, not necessarily, right? Because if you're talking about home ownership being at its peak, and you're talking about the next, let's say 12 to 18 months, a lot of people leaving home ownership, because let's be real, there's a lot of people that are selling their homes for different reasons. Yeah. Right? There's people who are getting older, right? We have the baby boomers who are a big part of our population. They're saying, you know what? I had this home. Now is the time to sell because the housing market's so hot right now. I'm going to downsize to a condo or a townhouse or an apartment. As home ownership goes down, all those millions of Americans are going to be going into either Class A apartments with, obviously ancillary communities with all the bells and whistles, or they're going to get into smaller, right, first floor, single family house, kind of that ranch style home that's very popular here in the Midwest. So I think if you're an investor, putting your money in something like a 2 or 3 unit building or a 4 unit, or putting your money with a company that's, focused on building a lot of Class A with all the amenities like we're doing, wink, wink, right? Or, potentially even getting into, single family housing with 1 floor, maybe something around the lines of a price range of 200 to 300,000. I think that's, for me at least, that's ideal. That's where I would put my money.
Yeah, absolutely. And it's really interesting to see, and I'm curious to see how the millennials will buy up or at least rent single family houses, right? Because a lot of the younger, or I should say, crossing over the generation of Z, we're less inclined to have kids, we're less inclined to have children. So really interesting to see what that pattern, social economic pattern will look like as far as single family ownership and rental. So,
and I will say this, right? I will say this golden nugget for all of you guys that have stuck around up until now, right? Because we're trying to get our retention rate up, right? Yeah. For all of you guys that stuck around, I'm going to say this opinion. I think the more institutions like BlackRock we see, like BlackRock buying up single family homes, I actually think that prevents an inevitable crash. I think this crash that everyone's talking about, the more institutional money gets into this, I don't see a crash happening.
Ooh. Holy cow!